Hello everyone, it's Wednesday, July 9, and today we're taking a closer look at the euro and British pound charts to evaluate potential market shifts. Both the euro and the pound sterling came under pressure following US President Donald Trump's latest moves on trade. On Tuesday, Trump announced that no preferential terms would be granted to countries seeking to extend tariff negotiations beyond August 1. This statement rattled sentiment around risk assets, adding to existing market tensions. Some observers believe the timing of the announcement was deliberate, an effort to pressure the European Union, which countries to push back against a proposed trade deal that would impose a universal 10% tariff on a wide range of EU exports to the United States. Adding fuel to the fire, Trump also floated the possibility of slapping a 50% tariff on aluminum and a 200% tariff on pharmaceuticals. These aggressive proposals triggered a wave of market volatility, leading to a renewed demand for the US dollar. Tuesday's macroeconomic calendar was relatively quiet, with few notable data points. These included Germany's upbeat trade balance data and a weaker than anticipated US small business optimism index. Still, these figures failed to generate any notable response in the foreign exchange market. Now let's take a look at today's macroeconomic calendar. Key events include the Bank of England's Financial Stability Report and the minutes from the latest Financial Policy Committee meeting. BOE officials are widely expected to stick to their current policy stance, signaling one rate cut per quarter. As a result, the British pound is unlikely to experience heightened volatility in response. In addition, Bundesbank President Joachim Nagel is scheduled to speak today. However, his remarks yesterday failed to move the market, suggesting limited impact from today's appearance. Later in the day, investor attention is likely to shift toward the release of the FOMC meeting minutes. These are expected to reinforce the Federal Reserve's cautious, wait-and-see approach. Consequently, a sharp drop in the US dollar seems unlikely, especially given President Trump's ongoing trade rhetoric. Instead, market participants should keep a close eye on fresh comments from the US president. His increasingly aggressive tariff threats are likely to weigh on risk assets and could further bolster demand for the greenback. Turning to technical analysis, the 1-hour EUR USD chart suggests that the 1.1689 level presents a potential buying opportunity. A false breakout at 1739 would trigger a sell signal, extending the current bearish correction and dragging the euro down to 1.1689. If the price breaks through these levels and fixes below it, the euro could dip to 1653, potentially reaching 1623. At this mark, I would recommend going long on a rebound, targeting 25-30 pip move. Long positions at 1689 should be considered on a false breakout, with an expected move back to 1739. A break above 1739 would clear the path for further upside towards 1787 and potentially 1825. At this mark, it would be wise to go short on the rebound in anticipation of an intraday correction of 25-30 pips. Short entries at 1787 and 1739 would be relevant on the false breakout. Similarly, long positions at 1653 and 1689 would only be prudent after a false breakout. As for the British pound, it continues to mark fresh one-week lows, underscoring the strength of prevailing bearish trend. A false breakout at 36.04, particularly following the release of the Bank of England's Financial Stability Report and minutes from the latest Financial Policy Committee meeting, could trigger renewed selling pressure and push the pound-dollar pair down toward 35.65. If the price breaks below this level, the pound will likely slide to 35.28, potentially extending losses to 34.99, a new local low. At this level, long positions on a rebound would be justified, targeting an intraday correction of 35-40 pips. Going long at 35.65 and 35.28 should only be considered if a false breakout occurs, suggesting a possible recovery toward the 36.04 mark. If the reaction to the BOE reports turn out to be muted and sellers remained on the sidelines, it may be wise to delay short positions. In this case, selling opportunities could emerge on a false breakout at 36.43 or on the rebound from 36.77, aiming for a pullback of 25-30 pips. Good luck to all. Thanks for watching.